Hello, everyone. Thank you for joining us today. My name is Greg Strosnider, and I'm from STORIS. I work with furniture retailers, really helping aligning technologies with their operational needs. And I'm really excited today to have my co-host for this webinar, Christine Martin from Avalara. And we're going to have a really great conversation on tax compliance and tariffs, and really kind of keep it interactive and light, and talk about, how omnichannel selling is affecting furniture retailers today, what tools they could use to kind of leverage to protect their margins and overall improve the operational efficiency through the use of, maybe tax software. So Christine, you want to introduce yourself as well?
Sure thing. Greg, thanks for having us here today. I certainly appreciate it. I am a solutions consultant to Avalara. I've been at Avalara now 16 years, but before I joined Avalara, I spent a number of years in industry as a tax manager. So I bring this functional side of the tax world over to the technical space of Avalara. It's the best job at Avalara, I think.
Awesome. I'm glad to have you today on the webinar. So where do you want to start today? Do you want to talk more about omni-channel selling perhaps, and kind of maybe start the conversation there?
Yeah, let's go down that path.
Okay. From a tax perspective, how do you think the ability for retailers to sell online has essentially impacted a lot of physical brick and mortar retailers today?
Well, this whole omni-channel piece, I think, just throws a kink in things for some folks, because if you're not automating the tax side of things, now I've got this online channel that I've got to update rates and rules. And then I've got my POS piece that I've got to update the rates and rules. And if I'm selling through marketplaces, I've got to be able to get those transactions as well. And just the maintenance of all of that is hard. And I mean, think of tax holidays. If a tax holiday starts at midnight on the 1st, somebody's got to flip the switch at midnight. So is that the IT guy that's going to stay late and turn everything off so that tax isn't calculated? So this omni-channel just adds some complexity, because I've got so many different moving pieces that I have to update in all of these different places. That's a full-time job to manage in itself.
Especially when you start taking into account the tax implications, right, for potentially selling online into different tax jurisdictions or just different states in general, right? There can be so many different nuances to how one state or county might change their tax rates, and they change all the time. But also, as you start to sell more online, right, that certainly has an impact. I think the stats I saw was there was over 12,000 local tax jurisdictions that you could potentially have to be compliant for, depending on how often you sell and what places you sell into.
Yeah. So, I mean, and let's keep going down this path, because if you've got a POS store, you've got a storefront, a building that somebody comes in and buys something, it's pretty easy to figure out how much you owe and the taxes at that one location. But bringing in this omni-channel world where now I'm selling remotely, I'm selling online, this whole South Dakota versus Wayfair Supreme Court ruling threw a wrench in things for people as well, because now I may have to charge tax in a whole bunch of other states that I didn't have to before, because of this concept called economic nexus. Well, it was somewhat easy to figure out what was taxable for my store or a couple different stores, but now I've got to figure out how I should tax all across the United States. And that complexity in itself just is mind-blowing.
What does most states require from a revenue recognition standpoint? Like, once you get over what certain amount, do you typically have to start consideration for those different tax jurisdictions?
I wish every state would be the same. I wouldn't have had a job for this long if every state was the same, right? Some states look at just taxable sales, and it may be over $100,000 of taxable sales. Other states look at all sales, not just taxable sales. Other states have this hybrid of sales and the number of transactions. So that, to me, just adds the complexity to it as well, because now I've got to figure out, hey, I've got this number of sales and this dollar amount in a state. Have I reached a threshold? Do I have to start collecting tax there? That's a full-time job in itself. And I don't know too many people that are actually looking at it every quarter, every 6 months to say, hey, I'm going to register and start collecting and remitting tax in another state.
Yeah, and if you don't collect it up front, then you're probably on the hook for being owed it to the state and down the line. So if you don't collect it, you potentially impact your margins negatively, but you do collect it, then you could hamper the customer experience because you collected a tax that the customer didn't actually owe, and it ruins the reputation.
Yeah.
So there's a lot to consider there.
And I will say for retailers, it's a little bit stickier because you've got these people that are auditors with the states that are out there, and they're buying things just like everybody else. And I work for a company that got caught this way, and it's a crazy story that we ran the gift shop at a place in Houston, and somebody in marketing thought it was a great idea to have a catalog. And the tax department didn't know about this catalog, but in the catalog it said, if shipped to Texas, add tax. Well, an Indian auditor happened to be on vacation in Texas, picked up this catalog and saw, oh, if it's shipped to Texas, add Texas tax. But he knew that this company was all over the country. He went back home after his vacation and said, hey, boss, look at this. And before I knew, that state came to do an audit on us, which we expect every 3 or 4 years anyway. And his first question was, I want to see all your catalog sales. And I was like, what catalog sales? And he pulls out the catalog. And before long, all of these other states started asking the same thing. So this was just a guy on vacation that recognized our name brand, and it started this whole downstream spiral for us of, oh my gosh, we've been selling through this catalog. The tax department had no idea. And it really had a financial impact on us and some penalties and interest that we had to pay for catalog sales at a gift shop.
Exactly. Sometimes it's the small decisions that it's hard to stay in compliance and understand everything that's going on when you're a small business, or even if you're a bigger business but you're trying to expand. There's just a lot of nuances to consider. Even I think to the point of, shipping and delivery charges, I think are probably a great area for that hidden complexity, right? Where in some states, and depending on the addresses, it could be a different tax rate. And so it's up to the retailer to maintain that and be responsible for ultimately those fees they're collecting.
Yeah. You bring up, the different jurisdictions. My old house in Georgia, Swanee, Georgia, 30024, is in 3 different counties with 3 different tax rates. Which one do you pick? But if you look at the street address, you know which jurisdiction it is. Most people look at the population of a county. If 30024 is in 3 counties, which is the most populous county, use that tax rate. Because the likelihood of somebody being in that more popular county is more likely, right?
Yeah. But again, it comes down to the compliance. And if you get audited, you have to provide support for the rates that you're charging to your customers.
Exactly.
And then I know you mentioned sales tax holidays. I mean, that also comes into issues, right? I guess when you're talking about larger ticket items, again, I think hitting that nexus of if it's $100,000 is a pretty easy threshold. If you have a couple $1,000 order, and it could just be one order or a couple of orders that get you over that threshold for those rare occurrences. But if I go back to sales tax holidays, like at the same time, if it's Energy Star appliance, right, or a power recliner or electric fireplace or something to do with outdoor furniture, etc., does that included in Energy Star appliance? If that's included, you may not sell appliances, but again, there's still nuances the retailer has to consider.
Yeah, there are energy tax holidays. Usually, a lot of times people think about tax holidays around back to school holidays, but I just think of having to maintain what's included in a tax holiday and what's not, and how do you manage that if you're doing this all manually? So tax holidays, the complexity, and we were talking about this earlier, I can order something today, but it's not going to be delivered for a few months. Does that tax holiday still apply when I deliver it because I ordered it during a tax holiday? That's just the nuance that is mind-boggling, I think.
Yeah, exactly. It becomes, I think, when a retailer looks at a lot of those nuances and the complexities they have to manage on a day-to-day, it really can be a headache, right, for the back office to be able to manage those things. And ultimately, the way I look at it is those headaches can have a financial impact, as you said, for the example that you mentioned. And so if you don't collect those taxes up front, or you collect the wrong amounts, it's ultimately the business that's on the line to make up the difference, if you will. And it could be substantial depending on the size of the retailer or just the order in general, based on the margins that they're making.
Yeah, if we think about what sales tax is on the consumer. Well, why not pass that on to your consumer every chance you get? because you don't want to have to pay it out of your pocket when you could have passed it on to somebody else. And, I kind of chuckle when I think about this whole sales tax piece. Granted, I've built a career around this, but if you think about what the states have done, they say, hey, we're going to collect this tax on transactions, which makes up a majority of their budget, but we're going to make it as complicated as possible. And we're going to require you sellers to collect it and figure out these rules that we're writing. And by the way, if you do it wrong, we're going to penalize you.
Yeah.
I mean, it's just craziness. Instead of making it super easy for people to comply, they create tax holidays and these rules around jurisdictions, and it's hard.
It's really hard, and it's a full, in some cases it's a full-time job, right, for multiple employees that might work for an organization. If it's a large organization, they might have multiple employees. I know I've run across this firsthand with several retailers that we've worked with. They have multiple employees that they might pay north of six figures, right, to be able to manage just the compliance on a day-to-day basis. And it's a full-time job. But then you think about the smaller to mid-sized retailer at the same time, they may not have that employee to be able to do it. Maybe it's a part-time person trying to manage all of those complexities that the state is putting on them, especially when you consider nexus implications, maybe the neighboring states, et cetera. Yeah. It can have a huge cost.
Well, we talked about this calculation piece and how to assign jurisdictions and the taxability, but we haven't talked about the filing piece of things. That really comes down to that last step of it, if you will. And there is some complexity in that itself. There's these different filing frequencies. I think about Florida. Florida is one of these states where the tax return is technically due on the 20th, but if you file electronically, you have to initiate the payment before the 20th. And just keeping up with these rules by state, and again, it's a full-time job, not just the tax rates and the taxability and that research, but then I've got to somehow be able to report it all.
Yep.
And how the heck am I doing that?
Exactly. It could be a full-time job for different sized businesses just to be able to keep abreast of what those changes are. And if you could help potentially automate a lot of those things through the use of technology, it could certainly make the business owners and CFOs and, the appropriate respected people within the organization definitely, I think, sleep better at night in that regard to make sure that they're in compliance with what they need to be.
Well, from an executive perspective, it's really important to be in compliance because sales tax, these companies are acting as agents on behalf of the state. So if you collect tax that doesn't get reported, the executives are on the hook financially for those things, and they can see some criminal charges if things are not done correctly. So from a finance and executive perspective, compliance is so important because nobody wants to be in trouble over sales tax.
I wholeheartedly agree. I would not want to be in that position. Let's maybe try to pivot a little bit, Christine, and talk more about tariffs or cost of goods, because I think that's also another important thing for retailers, especially in today's age. I mean, tariffs aren't anything new that either the U.S. government has used over the course of its history, if you will. I just look back to 2018, 2019 range, they put some tariffs on particular imports coming from China. I think it was a 25% tariff back then. And so what we saw in that regard in the subsequent years was those companies shifted manufacturing to other countries that weren't affected by that. But at the end of the day, even if you look today, I think the most recent stat going back to 2024 was still, out of the $25 billion worth of furniture, which is typically imported annually, about 60% of it still comes from China and Vietnam. So at the end of the day, the retailer is still paying subsequent fees per se, right, to import those goods. And that's changed today, and I think it's ever changing, and it will continue to change in the future. The point I'm trying to make, though, is that, there's certain things that the retailer can control, and there's certain things the retailer can't control. And so giving them the levers to try to control the levers they can, I think is really important.
We call it the boomerang effect because right now there's this tariff. It's 100%. Oh, wait, tomorrow that tariff is going to be 120%. Oh, wait, next week it's going to be 150%. Let's drop it back down to zero a few weeks later. So this bouncing around between all of these different rates, I don't envy anybody that's having to do that within their business. I was getting ready this morning And I had the news on, and there was the stream of news feed that came across, and something kind of caught my eye that there is here in New York, there's a coffee retailer that is now imposing a 1.5% surcharge on all of their orders to cover tariffs. So we're seeing that an awful lot as people now are imposing these surcharges so that they're not eating this cost of tariffs, trying to recover it and pass it along. They don't necessarily want to increase their price of an item, but now they're adding these tariff surcharges to invoices so that it doesn't impact their bottom line as much as it is, because it really does have a huge impact on folks.
It does, and I think transparency is key, and I've heard it from various different resources over the years, is ultimately a lot of times, right, when a consumer negotiates the price of a good, they negotiate the price pre-fees, if you will. Like,
Yeah.
it could be delivery fees, could be taxes, could be additional import fees, right? They may be able to make that's applicable. And some retailers have bode very well with that, right? They can keep very competitive with their prices. And once you negotiate the price, the consumer in a lot of cases say, okay, well, it is what it is at that point, right? For the taxes and fees. I can't adjust what that fee is that the retailer's paying for me, but I'm good with the price of the goods. And so again, I think it, provides the retailer the comfortability. They can still keep their prices in line, but as long as they manage the other pieces of the puzzle that they have control over, that it gives them some finite levers they can pull.
We certainly saw this with credit card charges as well. There's an awful lot of retailers that have credit card surcharges if you're paying by a credit card as well. So we've kind of taken that same concept and added that to the tariff world to help reduce that expense so that margins still stay in line. But also think about, it's not just the importing of goods, but we see companies that are now shipping their products all over the world as well. Maybe things that are made here in the United States, and those tariffs become important as well. As what is that charge for shipping things outside of our own country? And how do you manage that? Whether that is something that you're going to pass on to the customer themselves as well.
Yeah, exactly. And the heart of it really comes back to, Christine, is having the ability for the retailer to kind of build resilience into their margins and ultimately their supply chain, so they can manage the tariffs and duties and taxes and fees that they ultimately are on the hook for, right, depending on what they're doing, and being able to kind of manage those levers internally within the business.
I love that word resilience. That is so applicable to what's happening.
Yeah, it's ever more important today. Let's change this conversation a little bit and say, from your perspective, from a tax compliance standpoint, do you see a major difference from a independent retailer, smaller, mid-size independent retailer, from the larger retailers that impact more, have more national presence?
They all have the same requirements, right? They're still having to charge the right tax, the right rate, for the right jurisdiction. They still have to report it. It's just now volume, right? From a filing perspective, they may have more returns, but the bigger you get, the more complex it is, because now I have to know how shipping is taxed in more and more states. So I think they still have the same challenges, just the breadth of it becomes a little bit more onerous the larger you get as well.
And it probably also matters the different types of products that the retailer might sell to, especially in the home furnishings industry, where you might have more high-end special order designer type of marketplace, right? That's more a different type of consumer. You have to then manage different types of certificates or different bits, because you might do more resale certificates, right? Depending on how you organize the business.
Yeah, the smaller retailers may not be selling to other people that are reselling their own products. So this whole management of exemption certificates adds to this level of complexity. From I'm selling to people that are reselling my product, I'm selling to government agencies, I'm selling to designers that are then reselling it to somebody else, maybe for staging. And how are you managing all of these exemptions? How do you know what forms? How do you know the rules in each state on whether those exemptions even process? But to me, here's the crazy thing. I worked for a hotel company when I first started my career. And imagine somebody comes in and says, hey, I'm tax exempt, and they hand you over this form. But 4 years later, the auditor comes in and says, hey, you remember that one guy from that one night that stayed and you didn't charge him tax? I need that exemption certificate. That's the same concept for retailers, where this one person comes in and says, hey, I'm tax exempt, here's my form. Well, 4 years later, the auditor looks at these thousands of transactions that you've had over the audit period and says, I need that one form. What did I do with it? Now I got to go dig through and find what I did with that one piece of paper, because that one piece of paper may cost me an awful lot of money. What did I do?
Exactly. And I think that comes down to the individual nuances that a home furnishing retailer has to manage. And today, with the use of technology, there's ways to help them do that effectively and efficiently, and being able to do so where they can control their margins, but also give them the comfortability that they can go to bed at night knowing that if they do get it audited in several years, they have that information readily at hand.
You know, these retailers that we both work with, to me, compliance is much bigger. It's not just the rates, the rules, the exemption certificates, the filing of the returns, but it's the licensing as well. And we were talking about this earlier today of, do you have elevators that need permits and signs that need permits and all of these sprinkler permits and all of these permits that you need? Again, that's part of this compliance world that they live in as well. So managing exemption certificates, managing these business licenses and permits that have to be renewed is part of this compliance challenge, if you will.
And you hit it. You mentioned earlier, Christine, is like the size of the retailer. All different size retailers have the same complexity they have to deal with, right? If you're a smaller retailer, you might have somebody that's doing this part-time. You might have a fractional CFO, something along those lines, right, to help you manage those things. But it's not a full-time job in a lot of those instances. And if it is, it's not a full-time job for tax compliance or certificate management that they might come into. They have to partake in, but they still owe that, and they're still responsible that to the end governmental agency, if you will. The larger retailers just have more volume that they may not be able to manage internally with just within one person or two people. And so at that point, the economical efficiency of being able to leverage technology today just helps that, makes it even a better ROI for them, because they can utilize those resources towards other maybe, financial planning and analysis parts of it, where the organization or different components where they could get a better ROI than managing 10,000 tax certificates to know when they expire and who they're for and control that during an auditing purpose.
I worked for a retailer. We had 12 people that did nothing but tax returns. We didn't have automation. 12 people. That's a lot of money that could be spent somewhere else to be more strategic.
Absolutely. Absolutely. Especially through the use of technology today. And I think that's kind of the heart of the conversation that we wanted to have today was, STORIS has a great product offering. Avalara has a great product offering. And through the use of the combination of goods, the takeaway is that through the use of technology, I think there's a lot of use cases for retailers to leverage that technology that's available to them today to help make their businesses be more operational efficient, and in turn really help protect those margins, provide that resilience that they need in an ever-changing market within the industry today.
Yeah, I completely agree. Automation. I mean, we've talked about AI. Everybody hears about AI, but AI is just part of this automation piece. But automation to be, to your point, resilient, but to be efficient. Efficiency is so important. I mean, companies are asking people to do more with less. Well, why not do more with automation?
Yeah, and leverage the technology that's available to you, and ultimately be proactive and strategic in the areas that you can invest in technology, and then invest in your people in the other areas that really make the difference when you're talking with your end consumer and providing the experience that they're looking for at the same time.
Exactly.
Well, Christine, do you have any other topics that you'd like to talk about today?
Let's talk about some other fees, because we've talked about tax, we've talked about tariffs, but there's some other things that are kind of looming out there that I think everybody should be aware of. And there's these fees. There's the mattress fees that are out there, these recycling fees, sometimes with light bulbs. But there's another fee that popped up a few years ago in Colorado called the retail delivery fee. And we think about what happened during COVID. People stopped driving. So people stopped driving, they stopped having to fill up their tanks, therefore gas tax revenue decreased. Well, the states don't necessarily want to increase the tax rate because that's going to go out to the voters, but they could implement a new fee that doesn't necessarily go out to the voters. And Colorado started to refill their coffers with this money from retail delivery fees. The state of Minnesota said, hey, look at how well that worked in Colorado. Maybe we should try this. And last year, Minnesota enacted a retail delivery fee. Well, now there's 7 states that are now contemplating these retail delivery fees. So anything that is delivered by vehicle, whether it's an electric vehicle or gas vehicle, may be subject to these retail delivery fees. It kind of feels like a tax, but it's technically not a sales tax, but something that everybody that's in this retail space certainly needs to be aware of is that there's a whole bunch of activity out there trying to recoup some taxes that were lost over the years through these retail delivery fees. So something to kind of put in the back of your mind and think about this for future and pay attention to what's going on out there with all the states.
That is some great insight, Christine. Thank you very much for that. And I think that's probably going to wrap up our conversation for today. So I just wanted to thank you for your time and your excellent information on tax compliance. And hopefully this has been very helpful for the retailers that are listening to this webinar. And thank you again for your time.
Thanks so much for having me. I certainly appreciate it.
Have a great day.
You too.